Most people think the stock market is risky, confusing, and only for experts. That's why they never start. But the truth is, investing in the UK stock market is much simpler than it looks. You don't need a finance degree, and you don't need a lot of money. In the next few minutes, I'll break everything down step by step so you can understand how it works and how beginners can start with confidence. Section 1. What is the stock market? The stock market is simply a place where shares of companies are bought and sold. When you buy a stock, you are purchasing a small ownership in that company. In the UK, the main platform for this is the London Stock Exchange, where major companies like banks, energy firms, and retailers are listed. These companies allow investors to buy shares so they can raise money for growth. As an investor, you benefit if the company performs well over time. Instead of starting your own business, you are putting your money into businesses that are already established and generating revenue. Section 2. How you make money. There are two main ways to make money in the stock market. The first is capital growth, which happens when the value of your shares increases over time. For example, if you buy a stock at a lower price and sell it later at a higher price, the difference is your profit. The second way is through dividends. Some companies share a portion of their profits with investors in the form of regular payments. This creates a steady income stream even if you don't sell your shares. Most successful investors focus on both growth and dividends to build long-term wealth. Section 3. Key UK market terms. Before you start investing, you need to understand a few basic terms used in the UK stock market. The FTSE 100 represents the 100 largest companies listed in the UK and is often used as an indicator of market performance. The FTSE 250 includes mid-sized companies that often have higher growth potential. Another important term is a Stocks and Shares (ISA), which is a tax-efficient account that allows you to invest without paying tax on profits. A broker is simply the platform you use to buy and sell stocks. Understanding these basics will make everything else much easier. Section 4. How beginners should start. Starting in the stock market is simpler than most people think. The first step is to open an account with a trusted investment platform. Once your account is set up, the best option for beginners is to use a Stocks and Shares ISA, so your returns are tax-free. You don't need a large amount of money to begin. Even a small monthly investment is enough to get started. Instead of trying to pick individual stocks immediately, beginners should focus on simple options like index funds or well-known companies. The key is to start small, stay consistent, and gradually build confidence over time. Section 5. Biggest mistakes beginners make. Most beginners lose money, not because the market is bad, but because of poor decisions. One common mistake is trying to get rich quickly by chasing risky investments. Another is following hype without doing any research. Many people also invest in companies they don't understand, which increases the chances of making bad choices. Trying to time the market is another major issue, as even experienced investors struggle to predict short-term movements. Yet these mistakes usually come from impatience and lack of discipline. The better approach is to stay focused, avoid emotional decisions, and think long-term rather than short-term gains. Section 6. The strategy that actually works. The most effective strategy in the stock market is simple and consistent investing over time. Instead of trying to predict when prices will go up or down, successful investors invest a fixed amount regularly. This approach is known as pound cost averaging and helps reduce the impact of market volatility. Over time, This strategy allows you to buy shares at different prices, which averages out your overall cost. The focus should always be on long-term growth rather than short-term profits. By staying consistent and patient, you allow your investments to grow and compound, which is where real wealth is created. Section 7. The big picture. The stock market is not a shortcut to quick money, but a tool for building long-term wealth. The real goal is to create a system where you earn income, invest regularly, and allow your money to grow over time. As your investments increase, they begin to generate returns, which can then be reinvested to accelerate growth. This creates a cycle that becomes more powerful as time passes. The earlier you start, the more advantage you gain from compounding. It's not about perfect timing or large investments, but about consistency, patience, and staying committed to the process. Section 8. How much money do you need to start? One of the biggest myths about the stock market is that you need a large amount of money to begin. In reality, yes, you can start investing with a very small amount. Many UK platforms allow you to invest with as little as £10 to £50, making it accessible for beginners. What matters is not how much you start with, but how consistently you invest over time. Small amounts, when invested regularly, can grow significantly due to compounding. Instead of waiting until you have more money, the smarter move is to start early and build the habit of investing. Time in the market is far more powerful than trying to invest a large amount later. Section 9. Mindset of successful investors. The difference between successful investors and beginners is not intelligence, it's mindset. Successful investors focus on long-term growth instead of short-term profits. They understand that the market will go up and down, and they don't panic when prices fall. Instead of reacting emotionally, they stay calm and stick to their strategy. They invest consistently, even during uncertain times, because they know that consistency builds results. They also avoid chasing trends or copying others without understanding what they are doing. Discipline, patience, and control over emotions are what truly matter. In the stock market, your mindset is often more important than your strategy. If you want to go deeper, watch the next video on your screen, where I break down exactly which UK stocks and funds beginners should consider first. This will help you take the next step with clarity and confidence.